Zimbabwe is one of the most lively countries in the world. And I'm sure you are aware of us, and I would like to start. We also have the oldest exchange, or most likely nearly the oldest exchange in Africa, having started in 1896. But unfortunately, we also have the oldest systems in terms of manual systems, in terms of trading. Those are the issues I'll talk through in my presentation. But to just give you our background in terms of the structure of the capital markets, because we are sort of new in other ways. We've got the Securities Commission being on the apex of our regulatory issues, having started in 2009. So it was, although we started in 1896, the regulator only came in 2009, which is very odd in most people's minds. We've also got custodians, international custodians, Standard Chartered, Stanbic, which is Standard Bank from South Africa. We've got local custodians, ZB and Old Mutual. We've also just started having a Central Securities Depository Company to start the automation process, which I'll talk about a bit later. Now, in terms of the stock exchange itself, the Zimbabwe Stock Exchange has got 69 listed companies. It's in the top, I'll say top 6 in terms of number of listed companies, although its market capitalization is far lower. We're talking about 4.96 billion as it yesterday. The highest has been 6 billion, and we're only talking about the domestic market capitalization. We've got 45 individual members of our stock exchange, but in terms of trading, we've got 14 firms which are members of the stock exchange. We have, over the past year, delisted 10 companies because of issues of meeting continuing obligations. We're very strict. We've started to be strict. We want to make sure our investors, as they come in, they look at us at international level. So we're strict with our listings, and hence we've actually reduced them. You might think I might be losing my job in reducing listings, but the whole aim is to have a quality listing and then grow from there. So I'm excited about the growth potential on that. But let me just talk through the major issues we are going to be doing, the update on the stock exchange. As I've said, we are manual, and that's a major negative aspect of our stock exchange. But you can look at it differently in the sense that although we are manual, we still trade about 1 million shares, $1 million US worth of shares on a daily basis. So can you imagine when we are now automated? We'll just go through the roof. In terms of automation, our aim is we should be automated by the end of first quarter next year. We've got a consultant already on board who's working with us in terms of actually getting vendors to put in their own bids. And in October, we hope by that time we'll have bids from various vendors for the supply of the automated trading platform. As you know, as I've said earlier, the CDS itself is already on the ground, and by end of October, we expect the CDS to be working. So when we will then interface next year so that we've got a completely automated system which is seamless. Now, coming back to ownership of the stock exchange, we are moving away from being a mutual society into a shareholder-owned company. So that's demutualization. We're in that process, and we hope by the end of November that process will be through. In terms of listings, it's a major project we are undertaking. The last time we looked at our rules was in 2002. We're now doing a whole revision on that, so that we have got new listings. We're benchmarking against what we've done in SADC, what's happening in other countries. So we're also internationally benchmarking our listing rules so that we're at international standards.
Doing business in Africa, you can't afford to be without Africa Investor.